Welcome, everyone. This is the Future of Finance podcast, Future of Finance mini-series here at Wharton Sirius XM. I am Itay Goldstein. I am a professor at the finance department and the chair of the finance department here at Wharton. And today we're going to talk about a very exciting topic, the future of FinTech. Throughout the history of finance, technology has always played a central role. We saw many technological advancements starting from ATM and going to credit cards. And usually we had the incumbents in the finance industry adopting all these technological revolutions. But what happened in the last 10 years or so has been a little different. And this is why it got this name, FinTech. Basically, what we saw was that the pace of technological advancements has been much faster than before. But maybe even more peculiar and more exciting is the fact that a lot of the technologies are being introduced from the outside, kind of trying to change the structure of the industry and challenge the incumbents. And this is why this FinTech wave has been so exciting and generated so much attention. Today we have two excellent guests to talk about these changes and what is on the horizon when it comes to FinTech. We have Alesia Haas, who is the CFO of Coinbase. Hello, Alesia.
Hello.
Great to see you. And we have Michelle Lai, who is a Wharton alum and a key player in many of the crypto startups and innovations. Among other things, she is a board member of Electric Coin Corporation. Hello, Michelle.
Nice to be here, everyone. Although I'll say it's the Electric Coin Company.
Electric Coin Company. Thank you very much. So great to have you, Alesia and Michelle, and let's dive right in. So we are all thinking about cryptocurrencies, starting from Bitcoin, and then we had many other cryptocurrencies and still have them, and they sort of go up and down. If you're looking at it from the point of view of an outsider who is just hearing about it, seeing some of the developments, but not fully understanding what's going on, what can you say about crypto? Has crypto now become mainstream? Is it about to become mainstream? Is it meeting the expectations given what we had in mind when it started? Alesia, let's start with you.
Thank you, and thank you for having me. So I think it is no longer debated whether crypto is here to stay. That was a conversation we had 10 years ago. Is this niche? Today, it is solidified. It is a mainstream asset class. And I think you can look to examples of this. The ETF approvals that we had starting in January of this year with the Bitcoin ETF and then just this summer with the Ethereum ETF have now given crypto the official stamp of approval from both regulators and major institutional partners. And we've seen incredible engagement there. Spot Bitcoin ETFs have become the fastest growing ETFs of all time. There were over $17 billion in net inflows. And we are seeing broad adoption. We're seeing new capital flow into these ETFs. We can also point to the number of people that own crypto, both in the US and globally. Over 52 million Americans have transacted in crypto, 400 million people around the globe. When you look at the G20 countries, you can see that they are driving regulation in their markets. You can see this with MiCA in the EU. In the US, we have bipartisan support for crypto regulation, even though we have not seen the approvals that we need here to have comprehensive regulation here in the US. And then we get into like new products like stablecoins and layer twos like Base, which is a protocol that we've built on top of Ethereum, which enables fast, cheap transactions. We are seeing huge developer activity now building new apps on these protocols that enable fast, cheap, easy to use FinTech products. And this is what I think will then become what really becomes daily conversations, daily use cases. How do we use payments that are fast, cheap, global? And we've seen developer activity. We saw 8 times sequential developer activity in Base in the middle of the year. We saw growth in Q3. And so this is where we really think that the future is going to build these ubiquitous, fast, cheap, global payment infrastructures.
Great. Michelle, What do you think about it from where you sit in the industry?
I don't blame some people for having doubt. We've gone through a lot of market cycles, many in existential crises. The most recent one being, I think, 2022, when a lot of the centralized crypto players went down, and that's when Itay and I first met, actually. Um, and I think growing out of that, we have persisted. And to Alesia's data points, we have regulators coming in, we have governments wanting to implement CBDCs, and a lot of other initiatives that I see as indicators that the world now has moved on from asking if we'll stick around. You have all your large financial players like PayPal, BlackRock, Franklin Templeton, even UBS a couple of days ago, making their mark in the industry. And these are organizations that don't change their minds very often on the big things.
So you both mentioned that this is here to stay. It's kind of now effect on the ground. It's big. There are a lot of people paying attention to it, trading it, investing in it. But I think the main question that comes to mind is how exactly is it going to change the financial system? Is this going to make consumers' lives easier in any way? Is this going to reform the way that we are doing payment, the way that we are consuming and paying for things? So what should we expect going forward from FinTech and from cryptocurrency more specifically?
This is the first time that we've seen a new payment rail. So much of the innovation over the last couple of decades has been better user experiences, front-end technology, but they've been going through similar back-end rails. Now we're innovating from the rails up. And that is what I think is going to transform the next generation. One of the things that we talk about is we've moved from the internet standpoint as we were offline, then we were online, and now we're moving on chain. And so this is really the next generation of the internet, and we're going to be rebuilding transactions as well as a lot of just social applications on these new rails. So I do think that we are going to see crypto blockchains transform the way we transact. It's going to bring value and data closer together into transactions. And that will then underpin all of the financial transactions. My belief is that we are going to see this happen behind the scenes in many ways. And so I think we'll get to a place where everyone is transacting on crypto rails and they don't even know that they're doing it. One of the things that is different about crypto today is we talk about, oh, yes, I bridged my asset and I'm sending it on chain and it's alphanumeric characters. That is for the early crypto adopters. This is for the advanced users. This is too complex for mass market adoption. But we're seeing a lot of progress now with, for example, Coinbase released base names. Now I can send you crypto on chain just with a simple name, very like an email address. This is where we need to go with crypto to make it ubiquitous and easy to use for everybody to be using it. But yes, I think payments will happen on chain. And when you think about it, this rail, like you think about credit cards, they're expensive for the merchant, not for the individual consumer, but for the merchant. So they're expensive. You think about ACH, it is slow, cheaper, but slower. It takes 2 to 3 days. And then you think about things like Alipay, which are fast and cheap, but they're not global. They're very much a closed loop system. Crypto offers you fast, cheap, global. And that is what is unique about crypto, which is what's going to drive a lot of adoption.
Michelle, where do you see the main uses?
Yeah, so one thing I love about Coinbase is how it's been such a proponent for consumers, how to use crypto in their everyday lives, how to make their lives a lot easier and faster. I think just one point to add to the consumer side is recently Stripe acquired a stablecoin company for more than $1 billion. This is kind of a reverse acquisition because this company was trying to be the Stripe of crypto. So I think you have this very wonderful, like from within these companies, we're trying to rebuild rails that have existed pretty well, but now are time for a revamp. The other thing I wanted to contribute is beyond the consumer space. A lot of people who go to Wharton end up in the fund management industry, and Coinbase has been supporting many of these large issuers in making things like, and correct me if I'm wrong, Alesia, but on the Bitcoin, Ethereum ETF side, that's obvious. The part that I really like that Coinbase is helping is with what you call risk-weighted, real-world assets. Going back to my RWA from BIS ratios. Real-world assets, and these are where you can invest your tokens such that the underlying issuer invests in money market funds. It's kind of a reverse crossover, which I like. I think also for the more kind of banking, mergers and acquisition industry, where I'm really excited about is applying crypto and crypto adjacent technologies to improve the deal making process. So for example, in an NMA deal, there are a lot of trust assumptions between each party. And so far we've intermediated that by paying escrow agents or assuming that the repeat game setup ensures that people will be acting fairly. But there are very cutting edge frontier math-based technologies that can obviate some of those trust assumptions. And I'm super, super excited about that. Also, one more thing is Singapore just announced in the last few days a framework for commercializing tokenization for funds and fixed income. So they've involved 40 organizations over 7 countries in some of these experiments since I think like a couple of years ago or even more than that. So I'm super excited for how the industry that most Wharton people graduate into will be influenced and upgraded through crypto and crypto-related technologies.
So you both mentioned stable coins, and from what I hear around, this is indeed an area where people have a lot of hope for. One of the things about cryptocurrencies, and I think the reason that some people are skeptical about them is just the huge volatility. You look at the prices, it's kind of like a roller coaster. And this is exactly what stable coins are trying to fix, to make it stable. But the question, of course, is how credible it is. We saw episodes of runs on stable coins. So I think we all understand it really depends on the model that you're using. So Alesia, what do you think about stable coins? Is this credible going forward? Are the benefits really that big to justify the attention it's getting?
I think they are. And people are definitely using stablecoins. I think it's really important to look at stablecoin transaction volume. It's probably the most telling trend happening in crypto right now. So in 2023, stablecoin transaction volume was about $10 trillion. 2024 is on pace to double that. Year to date, we're near $20 trillion. And I think then you need to look to your second question around, are they actually stable? And the answer of that is yes, when the reserves are backed one for one. So for example, USDC, which is a stable coin that we offer in partnership with Circle, we think it's preferred for payments because it's regulated, it's transparent, and it's up more than 300% year to date in its total market cap. And we're seeing adoption in a variety of use cases for payments, for looking at it as a stable pair for trading crypto, but also as savings assets in many countries where consumers don't have access to US dollar bank accounts, but they want to hold a US dollar asset. And this is providing them a unique way to get that exposure to hedge their risk from other currency inflation in their own country. So when the reserves are transparent and held dollar for dollar, we do believe they're stable, and we've seen evidence of that. And then they provide a reliable store of value, and we're seeing that them being adopted because of what I mentioned earlier, that they're faster, cheaper, and more effective 24/7. There's very few things that you can access 24/7 and instantly self-custody on your own. They're very unique in that way.
And Michelle, do you share the same opinion about stablecoins? And maybe taking it a step further, how do you think stablecoins are going to interact potentially with CBDCs? And do you think that CBDCs could potentially replace them?
Wow, spicy second question. But on the first part, So Alesia's take, I largely agree with. However, most stablecoins are USD based. So to the extent you believe the USD is stable, then stablecoins are largely stable. But I know a lot of people who believe that longer term they are not. And a lot of people believe that to the extent the issuers are centralized, you don't really have something that is true to the ethos of crypto when it was first founded. So there are continuing efforts to create a different kind of stablecoin. Vitalik's favorite one is Rye. It's been around since, I think, 2021. It's ETH-only collateral. There's no peg. And they use interest rates to manage demand and therefore price. And it's so far actually been relatively stable. It's been roughly around 2.8 to $3 in the last few years, which is pretty remarkable because it's been a volatile last few years. So that's one edge take. In terms of CBDCs, it's unclear right now, I think, where what the prevailing CBDC take will be. In general, the countries that I'm aware of that are making serious efforts to do these projects, they are focused on quick settlement. And I do think that that use case is highly valuable. You can see with, for example, BRICS Pay was announced sometime recently, where to avoid long settlement times between certain currencies that are not your mainstream currencies, they've had to create an alternative path. I think CBDCs is an effort to do a similar kind of thing. There are concerns that I and many players in crypto worry about, such as surveillance, and whether that leads us a step closer to outcomes that we may not want. 1984 type of scenarios. But I think if we have sensible players in governments around the world, we will be able to avoid such a scenario, because there have already been parties that have expressed concerns.
I'd like to add on, if I could, to Michelle's comments, because I agree with much of what she said. So on the first, I think we should also say that the goal of stablecoins is to have the coin represent the underlying asset. And so with regards to, is it a US dollar-backed stablecoin, the goal is the stablecoin represents a US dollar, a euro coin represents the underlying euro. I agree with Michelle that many in crypto believe that the reason Bitcoin came was it's supposed to be the decentralized currency where you can then own an asset that isn't controlled by a centralized government. That is up to the user to decide what their allocation of their investment portfolio or their day-to-day use case should be. But the stablecoin's goal is to just represent the underlying asset, which could be a basket of goods, could be an individual currency, could be Ethereum, could be other things. So I just wanted to share that perspective. And then my view on CBDCs, which I think is worth adding to this conversation, is stablecoins. To me, it's like a new technology, much like a credit card, much like an ATM. It's a new way to hold and access a dollar. That was left to fintechs, as you opened up this conversation, Itay, to really drive innovation. And so how we distribute dollars, how we can transact with dollars, how we use assets has really been left to private industry. And I think that that will continue in the US, because ultimately, when you think about at least a US dollar-backed stablecoin, there's no change to monetary authority. It's still representing a dollar. Those dollars are still held in traditional financial institutions. The mechanism of transacting on a blockchain is really just a technology innovation, much like what we've seen in generations before.
Yeah, and touching on that, thinking about the government, because the government obviously plays an important role in CBDC, but it also plays an important role if you think about the regulation of FinTech and the crypto markets and so on. And Alesia, you mentioned MiCA as one piece of legislation and regulation. And I think we all know that in the US things are a little slower than that. So do you have any concerns about that going forward? Do you think that there needs to be a change?
I do. I think the US is at risk of losing its leadership position in technology and finance if it doesn't establish clear crypto regulations soon. And as you noted, we have seen countries like the EU with MiCA others in Asia. They're really setting the standard, and they're creating environments that are fostering innovation. They're driving investments. And I do believe it's a matter of our national security to defend the dollar as the world's reserve on-chain currency, just like it has been for the past decades. We think that clear regulations attract entrepreneurs. They encourage developers to innovate. They build businesses. And right now, I think that we're ceding that pole position to other regions to build the next wave of financial innovation. But there is hope. There is a lot of hope, because what we've now seen over the past year has been a recognition of this by many policymakers and regulators. And there's clear bipartisan support in Congress that's building momentum. And I think that we have optimistic hope that going into 2025, we're going into the most pro-crypto Congress that we have seen, and that there's real hope that we can get legislative clarity here in the US to really keep driving this technology.
Just to add a data point, I was looking at a developer report, global crypto developers, and North America and Europe were obviously leading for all of the history of crypto, but Asia has overtaken. Asia is now has the highest number of crypto devs, according to Electric Capital report, which is really shocking. I don't think it's that we suddenly birthed a bunch of crypto developers. It's the outward migration that I think happened.
Right. But I think one thing, Michelle, that you mentioned before is the coordination in regulation across different countries. Do you think that continues to be a concern?
I think right now a lot of countries are actually converging. They're converging on their attitude towards compliance. It might take more time to shake out, but I think a couple years ago, it was really unclear who would go which way. Where things are a little bit clearer is where most governments agree on the underlying technology. So, for example, CBDCs as a technology, or the rails by which transactions can be settled. But in terms of tokens, stablecoins, that I think still has some gray area.
Yeah. Alesia, how do you see that, the international arena? Do you think it's getting better in terms of just communication and collaboration and coordination across different regions?
I think that many people have agreed on standards around know your customer, money laundering expectations, sanctions, and that is very consistent on a global basis, at least in countries where there's strong financial services and heavy investment levels. So that feels very consistent. What feels inconsistent right now is whether countries are adopting what I would refer to as open loop or closed loop systems, and how they want to control data and leave it very siloed within their country, or whether they're willing to let boundaries be more fluid and create global centers of technology excellence and allow their customers, or their citizens rather, to transact with those global companies that are offering services in their countries. And so for crypto, this looks like, how do we allow self-custody? Can people take their wallets anywhere, or do they have to be custodied in the country, and we have to know those assets are sitting within geographic boundaries? And that is something from a policy effort that we are working very carefully on, because we really believe in the people's ability to self-custody and take their assets with them wherever they may be.
That's such a difficult problem. Like, how do you control where bits go?
Yes. Yeah, I think this is definitely one of the challenges with FinTech. So taking a step back and thinking about what this FinTech revolution is all about, I think the role of culture has been very important. So is the role of trust. In some sense, what ignited this FinTech wave was the search for better ways to achieve trust, and culture has been an important part of it. Where are we on this? Is that continuing to be an important aspect, and where are we going from here?
I think the culture has been maturing. I am significantly older than most people at crypto conferences, so I kind of feel earlier kind of felt that gap. But I think now we've largely gone past the kind of memeing and kind of the meme coin only kind of culture. There have been several cycles in the last year or so where you go to a conference and people talk about, we have too much infrastructure now. We need applications. We need real users. We don't just need Twitter followers and Discord users. We need real transaction volume. So I really like the way culture is moving. And I really have to credit Vitalik for pushing a culture of being really useful to a lot of people, and especially to people who may be in environments where they really, really need stable coins, for example, versus just using it because it's slightly easier or fun. So I'm very hopeful that this culture will help us move towards more productive use cases. And a very interesting recent development is in the last 72 hours, there are two of the most famous Ethereum Foundation researchers. They gave up some very lucrative advisory positions for a crypto project because they decided that, hey, we really want to dedicate our lives and our research to building open, fair, decentralized protocols. We want no conflicts of interest. So I think culture, at least in the space I'm active in, which tends to be more ETH focused, is quite positive at this moment. I'm happy with it.
And Alesia, you of course, you come from a bigger firm, one of the biggest in the industry. So you probably see it a little differently than that?
I think of feedback loops in culture. So I think that culture shapes how we develop technology, and then I think new technologies also shape culture. And I think you can look to the internet, and I think as you saw people move online, you saw a massive uptick in blending cultures across the globe. The world got smaller. The internet has its own unique culture. You see memes as a great example of this. And as people become accustomed to easily sharing information, sharing ideas quickly, accessing information, people get more accustomed to expecting that in all parts of their lives. What they've also seen, though, as we've gone more online, is that more and more of their information is controlled in centralized systems. And so this is part of the feedback loop. So now we see they want money to move at the speed of the internet because that's how they're used to sharing data. They don't understand why money cannot move at the same rate as information. But they've also seen like, ooh, I don't love that centralized system, that centralized power. And so that is the feedback loop that I think has then brought forth crypto. And you can see this with younger generations who are more comfortable digitally native. They drive demand for innovative financial products, and it reflects their values like self-custody, like decentralization, like independence. And I think you can see that that is giving rise to the adoption of crypto. And many people who then are sitting in companies are now watching this cultural shift, and they're using that cultural shift to drive their next roadmap. And that is what I think leading also to this wave of adoption of crypto within fintechs.
Great. So we're coming close to the end of our time here. So let me just ask each one of you kind of a concluding question, maybe reflection on what has happened and what we should expect going forward. So if you were to predict whether we are going to live in a very different financial system a few years from now, what would you say? Is it going to look very different from what it is today? And if so, what is the timeline that you think we should keep in mind for that? Alesia?
I think we're on the precipice of moving transactions on chain. I think that we are moving towards a world where many people won't see it because it will be hidden behind the technology stacks of companies in which you already transact. But we're going to move to a world where we've adopted crypto technology, where we are moving towards Bitcoin being an important investment asset in people's portfolio, where we're going to see the rise of stablecoins used in cross-border payments. And I do think that we're also going to see the rise of the new social media apps on crypto rails that will enable creator communities to get compensated from their creativity and move away from these decentralized intermediaries. So yes, I'm very optimistic, and I think that we are just getting there because we now have faster, cheaper technology. We are making it easier to use, and all of those key building blocks are getting to be in place.
And what is the timeline?
Oh my goodness, Itay, I'm not a crystal ball, but I definitely see over the next 5 to 10 years that this is going to be a transformation in how we transact on chain.
Okay. Michelle?
Yeah. So I think one of the gifts of crypto that it's shaking up the incumbents. It's forcing them to change, to update, to get with consumer preferences. But one quote I always refer to from Jeff Bezos is, focus not on what changes, but what doesn't change. And I think what will never change is people want as much freedom as they can have. Financial freedom, they want flexibility in their lives, they want to express themselves. So to the extent crypto allows them to do that, I think in all the good ways, things will change.
And you
And
also don't
timeline.
want to predict the timeline.
I think we are in the time of change. I think there's no turning back. Crypto is a religion, and there is a lot of people praying.
I see. That's a very good note to end on. Okay, thank you very much, Alesia, Michelle, for a great conversation on the future of FinTech. Certainly a lot to watch for and wait to see what happens. Thank you very much.
Thank you.
Thank you, Itay.